In August 2026, the United States crossed a financial threshold that is difficult to visualize. The gross national debt reached $40 trillion. For many, a number this large triggers immediate financial anxiety. It prompts questions about the daily cost of living and whether this national total will show up in the price of a gallon of gas. That anxiety extends to the grocery store, where the scale of government borrowing feels linked to the rising cost of basic household staples. When the public sees a $40 trillion deficit, the most common assumption is that the country has finally run out of money. It is a reaction based on the idea that the United States is essentially a household that has spent its last cent. However, the mechanics of a sovereign debt milestone work differently than a personal bank account. Reaching $40 trillion represents a specific level of long-term obligation rather than a sudden state of insolvency. This focus on a sudden, dramatic collapse leaves a vacuum. While the public waits for a bankruptcy that hasn't arrived, a quieter and more certain danger is building in the form of mounting budgetary pressure. This debt is the result of decades of structural deficits. For most of recent history, the federal government has consistently spent more on programs and services than it collected in tax revenue. That timeline accelerated during the COVID-19 pandemic, when the government borrowed trillions of dollars in a short window to support the healthcare system and the broader economy. To pay for that spending, the government issues Treasury bills. These are the physical instruments of the debt, securities that investors buy to effectively lend their cash to Washington. There is a widespread belief that this mechanism has allowed foreign adversaries, like China, to own the United States by holding its debt. The actual data on ownership shows a different reality. The largest portion of this $40 trillion is held by domestic investors, American banks, and local pension funds. Because the majority of this money is owed to American institutions, the threat isn't a foreign takeover. The strain is internal, placed directly on the country's own financial systems. Just like a credit card balance, the U.S. government must pay continuous interest on what it borrows. Every dollar added to the $40 trillion total increases the size of that mandatory payment. This is where Treasury yields matter. If investors lose confidence or inflation rises, they demand higher yields to hold government debt, which immediately drives up Washington's borrowing costs. As the debt grows, the math of interest becomes aggressive. Higher yields on $40 trillion cause the interest bill to climb sharply. These payments consume a larger share of the federal budget, crowding out priorities, leaving less money for infrastructure, research, or defense. A manageable level of debt is a tool, but a $40 trillion total creates a trap. When interest payments begin to spiral, the debt stops being a way to fund the country and starts becoming a cost that the country can no longer afford to ignore. This government problem eventually reaches your wallet. Because Treasury yields serve as a benchmark for the entire economy, when Washington's borrowing costs rise, the rest of the banking system follows. This translates into more expensive mortgages, higher auto loan rates, and increased interest on credit cards. The United States has reached a point where the math leaves only 4 possible paths to stabilize the budget. Washington could attempt to outgrow the debt through a surge in economic productivity, or it could implement significant spending cuts to reduce the annual deficit. The other options involve raising more revenue through higher taxes, or the current path, continuing to borrow until the market forces a crisis. Lawmakers are now at the point where they must choose which of these paths to take, as the cost of delay continues to rise. The $40 trillion milestone marks the moment where interest costs begin to dictate national policy. The choices required to manage this total will inevitably place a direct and heavy squeeze on the American taxpayer.